Ben ritrovati lunedì mattina sul floor del New York Stock Exchange, gli indici in questo momento piuttosto vicini alla parità, senz'altro un clima di attesa non soltanto per le elezioni di domani ma anche dopo la corsa delle ultime 2 settimane che ha portato i listini su livelli record, ma ne parliamo con il mio ospite qui sul floor, come vedete è Kenneth Porcari che è direttore delle operazioni sul floor per O'Neill Securities. Kenny, buongiorno.
Buongiorno, come va?
Benissimo, tu come stai?
Molto bene, grazie.
So Kenny, I was saying that today, after these 2 long weeks and the records that we reached on Friday, we're just taking a breath.
Absolutely taking a break, and nobody should be surprised at all that the market's kind of just digesting. Not on a whole lot of volume. It's giving people an opportunity to kind of, process what really happened last week, right? Because in a very short time, we went from a very anxious market to one that all of a sudden seems like it's all systems go again. Japan on Friday coming out and really doing shock and awe across the world in terms of what they did, how they kind of boosted the market. We saw what happened in Asia. It carried all around the world, and it took markets really to new highs. Here, both the Dow and the S&P closed at new highs on heavy volume as people started to rethink kind of all that angst and anxiety that maybe people thought was a little bit overdone.
Yeah, and it seems that really it's a kind of movement that only central banks can ignite lately. You know, that the Bank of Japan, of course, you were saying a big surprise. Today I read a very interesting article on the Wall Street Journal about Italy in particular, but of course it was wider talking about Europe. Bank of Japan proved that if the QE is not aggressive enough, it's not going to work. So in Europe, they might have the same issue.
And so that's actually kind of what added to the excitement on Friday, right? After the Bank of Japan, launched that program, people realized that, listen, free money is free money. It doesn't have to be dollars. It can be yen. Free yen is still free money, right? And so then the speculation about what the ECB was going to do in terms of, now igniting, once again, trying to ignite their economy. Now, don't forget, the minute the Bank of Japan came out and did that, the yen got pressured lower, the dollar soared higher, certainly oil went lower, gold went lower, and so therefore it's going to help the Japanese economy. If the ECB does the same thing and forces the euro lower, the dollar's going to continue to move higher. Now, having a strong dollar isn't necessarily the worst thing in the world, but having a strong dollar for the wrong reasons is potentially going to be a problem for us, right? And so if our economy is strong and we're pumping on all cylinders, then having a strong dollar is actually good. But the jury's still out whether or not that's really the case. And so I think you're going to run into some cautiousness here. I think you're going to run into some resistance. Feels very much like it is. And then tomorrow we've got midterm elections, which is really going to set the stage then for 2016, potentially the presidential election. What's it going to look like? Is there going to be a dark horse that kind of emerges from either party that may now, shake it up a little bit?
Also, the market is looking at the results because one of the issue that could make a difference in Wall Street is the tax reform. And in case we have a strong Republican majority that seems to be going to have at least in the House, maybe narrower in the Senate, right. Do you think that it could be feasible, or you will see more like a White House more aggressive in saying no and pointing fingers?
Well, that's an interesting conversation to have, because don't forget, it is the final 2 years of an Obama presidency. He's essentially a lame duck. If we get a Republican Congress, with Republicans controlling both sides of Congress, you have to look back at what's Obama going to do. Is he going to fight the last 2 years and go out, in massive gridlock with a nothing done, or does he want to start to concede a little bit and go out on the high of his presidency? I mean, listen, there's a lot of issues here for him to think about, and there's a lot of issues for the country to think about, and so it's going to be interesting. I think if that's the case, if Republicans take control, then we'll see kind of a softening of the Obama presidency going into the final 2 years of his term.
Do you think that the market agrees with you? Because it seems that the market is sort of not discounting, but probably expecting a Republican majority, then it could be good.
I think the market is actually absolutely expecting a Republican majority. Now, whether or not it's strong enough in the Senate or not, we won't know. And actually, you're not even necessarily going to know on Wednesday, because if some of the races are too close to call, like they're saying, this may drag on actually until the new year, by the time you have the do-overs and the ballot recounts and the re-elections, right? And so therefore it may cause some ambiguity, which will then cause some volatility, and so people should be prepared for that, right? They shouldn't necessarily be surprised by that volatility if we don't get that clear kind of majority.
And it's interesting that even though we are very cautious at the moment, just on Friday, we reached new highs. Could it be I mean, we have been saying this all over and over again, but it's not really, there is no explanation for this.
There isn't an explanation, and actually, and Friday specifically, it just certainly felt like, the market got goosed, right? Japan goosed it. There was a speculation about the ECB. The algos kick into high gear, and the automation takes over, and so therefore, it kind of runs away with itself, and then buying begets buying, right? Because when, that old saying, new highs beget new highs, right? And so therefore, we'll see where that takes us. But now listen, I think the U.S. economy is doing better. Certainly it's doing better than some of our counterparts, but you have to put it in perspective. Is it doing so much better that it should be rallying away like this? Or are we at the moment fully valued until we get another couple of months of data and we see what's going to happen? Now that the Fed has withdrawn, even though rates are still low, they've stopped pumping money in. So let's just, I think investors are now going to play this wait and see game.
Yeah, especially because if you compare this economy to other economies globally, of course, it looks like that we are growing very well. Right. But in reality, we talked about this many, many times. We don't really feel that. So on Friday, we're going to see the job report. Right. And that's going to be, you think, more interesting than the usual after they interrupted the QE, or is just going to be less relevant this time?
No, listen, the non-farm payroll report is always relevant as it gives kind of this temperature. I think, though, that what's going to really take control are the elections. People are going to focus on what it means. They're going to start to speculate after Tuesday, the different people that get elected, what's it mean for different industries, different sectors, who are their favorites, who are not their favorites. I think the non-farm payroll will certainly, if it comes in line, then it's not going to be a big deal. If it misses either way, if it misses to the downside, then I think once again it's going to stir up that whole is the Fed doing the right thing conversation. And yet if it beats on the upside, then people are going to say, in fact, yes, it's okay. The Fed's doing the right thing, and in fact, rates may start to rise a little bit sooner than expected. I still think rates aren't going anywhere till this time next year. September, October of next year. I think it's premature for anyone to take one macro report and decide rates are going up in March.
Yeah, a little bit of prevision. So let's try to think what is going to happen. If everything is confirmed, the Republican will gain the House, or at least we will have some good indication that not we have to wait for January. What is the market will do this week?
Right, there'll be some clarity, at least if we see kind of a definitive win. And markets like clarity, right? The thing that they don't like is when there's too much ambiguity, which is what causes the volatility. If we get kind of a drag on the elections and we're not really sure, then expect the volatility to heat up. I think on the downside on the S&P, you have to look at the 2,000 level now because it's a round number, really as support, because once again that's more psychological. I think 1975 is more realistic in terms of real support. On the upside, listen, we've tested as high as 2020, the first time around. I suspect that maybe we'll test it again, and depending on what this macro data looks like, we'll continue to kind of push higher. I think by the end of the year, though, we end right about here, which in fact would give us about a 10 or 11% absolutely return for the year. And I think that's just about what people were talking about come January. They were predicting a return to normalcy, and this would be that return to normalcy.
We'll see, and of course we will comment next week. What is the new Washington Circus?
Thank you very much.
Thank you, Kenny.
Bye bye.
Grazie a voi per l'attenzione. Alla prossima.